This voice is taken from an article with the title, How to Analyze the Interplay Between Interest Rates and Economic Calendar Events, which has been published on TraderTalks.net. The interplay between interest rates and economic calendar events is a complex one, and as such requires careful analysis in order to get a full understanding of the implications of any given event. Interest rates are a key factor in the global economy and are determined by the central banks of various countries. In addition, economic calendar events such as the release of various economic data, such as unemployment numbers, GDP figures, or inflation rates, can have a major impact on the direction of interest rates. In order to analyze the interplay between interest rates and economic calendar events, it is important to first understand the role of interest rates in the global economy. Interest rates are set by a central bank, and are typically based on their assessment of the current and future health of the economy. The central bank sets a target rate of interest, which it then attempts to maintain in order to ensure economic stability. When an economic calendar event occurs, such as the release of economic data, it can have a significant impact on interest rates. If the data released shows that the economy is performing better than expected, then the central bank may decide to lower interest rates, as this implies that the economy is in a healthy state and that investment should be encouraged. Conversely, if the data shows that the economy is performing worse than expected, then the central bank may decide to raise interest rates, as this implies that the economy is in a weaker state and that investment should be discouraged. It is also important to consider the impact of different economic calendar events on different countries. For example, if a given country releases strong economic data, this may mean that its currency is likely to appreciate in value, and therefore its interest rates may also increase. Conversely, if a given country releases weak economic data, then its currency may depreciate in value, and its interest rates may decrease. In addition to analyzing the impact of economic calendar events on interest rates, it is also important to consider how these events may affect other aspects of the economy. For example, a strong economic data release may lead to increased consumer spending, while a weak economic data release may lead to decreased consumer spending. Similarly, a strong economic data release may lead to increased investment, while a weak economic data release may lead to decreased investment. Overall, analyzing the interplay between interest rates and economic calendar events requires a careful examination of the implications of each event, as well as an understanding of the wider economic context. By taking into account the implications of different economic calendar events on different countries, and how these events may affect other aspects of the economy, it is possible to gain a better understanding of the implications of each event on interest rates and the global economy as a whole.